Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Each week here, we focus on a topic of interest to business owners, entrepreneurs, and real estate people. If you'd like to know the topic and guest each week, you're invited to sign up for a once-a-week email announcing the show topic at commercialrealestateshow.com. Well, today we're talking about the apartment industry. Let's get a view of the market from some folks working in the sector every day. Please welcome Mike Altman, Chief Investment Officer, Cortland Partners. Cortland's portfolio includes more than 15,000 apartment homes touching 35,000 residents. Mike, thanks for joining us today.
Thanks for having me, Michael.
Also, please welcome Ernie Eden, President, National Apartment Group with Bull Realty. Ernie's team assists clients in the acquisition and disposition of apartment communities in the Southeast U.S. Ernie, thanks for joining us today.
Thank you, Michael. Great to be here.
Well, guys, I'd like to get your view of the market from a market participant level. Mike, what do you see for demand levels and tenant traffic on your various properties?
Well, generally, occupancy is full and rents are growing. Real estate is still a neighborhood by neighborhood business. And so you really have to drill down to each submarket. Some are outperforming others. Overall, we've seen Class A rents really outperform all multifamily and other property types in 11 and 12. In 13, they seem to be moderating, while the Class B properties, more specifically our suburban portfolio, is really starting to pick up and accelerate its rent growth. Those markets have had much less new construction, and so the demand that's incrementally coming to the suburban market is really starting to push rents upward.
Yeah, okay, well, that's good news. And, you know, the housing market is starting to recover nationally. Mike, are you seeing any effect on your properties from the housing? I mean, do you guys do exit polls? I mean, are some of these tenants leaving and buying homes, or what do you see?
Well, there's a direct correlation between the housing market and our overall economy, and I'm in support of a strong economy. So I'm not afraid of having housing as a sector recover. I don't think we need to get back to the sort of speculative growth that we had in the single-family business that was literally stealing my renters who may have been 2 months behind on rent to go buy a new home.
And they can get their loan approved.
I'm not looking for that to happen again. Yeah. But overall, I'm in support of a strong U.S. economy. There's a number of reasons people move out. Some is new home purchases. However, Cortland is really focused on a Class B profile, mid-1990s built product throughout the Sun Belt, and those renters aren't at the top of the economic pyramid that is then launching two single-family homes. Mm-hmm. So if you were building fancy Class A buildings in urban cores, those residents are more likely to move out and buy a single-family home than my target market.
Right. Well, it was interesting to see people getting loans approved in that. They were getting approved with the mirror test, right? You put a mirror in front of their face. If it fogs up, they were approved.
Yes, that was interesting, Michael. Very interesting, but not economically very fun to go through.
It's also interesting. I like to tell some of my non-real estate friends, look, if you're at a party and everyone there is talking about all the real estate they're buying, you should be selling.
Yes, absolutely.
And if everybody's talking about how real estate's terrible, you might want to consider buying, right? Well, Ernie, what are some of the factors that are helping the apartment market perform so well right now?
Well, the overall recovery in the job market is helping a lot. The folks who seem to get those jobs are folks who typically rent. They're younger folks for the most part, and that helps a lot. The fact that homeownership is now at 65% as opposed to 69%, which it was a few years ago, doesn't hurt anything, certainly. Mm-hmm. In addition, there's been a lack of new construction for the last several years, and so that has helped as well.
Okay. And Mike, what else do you see that's affecting the market and make it so strong? I mean, some people feel like, can this be sustainable? But what do you see driving it?
It's fundamental demand. Mm-hmm. I mean, we're not based on a excited capital markets that's fueling the single-family home growth of the mid-2000s. I also see student debt as this next kind of wave of consumer finance that's coming into new households. The number of individuals coming out of college have, I think, an average of $18,000 in student debt. When I graduated college, None of my friends had student debt. That debt load is going to keep families in rental communities longer as they pay off that debt, take longer to build up a down payment, and just have less free dollars to spend on their housing consumption. We're in the space over time business. And so the longer time we can keep that same family unit in our space, the better.
Right, and like you talked about before, it's a little harder for them to get approved for that loan. So if they've got that student debt, then it makes it even more of a problem for them, right?
That's correct.
And I think also just the convenience of apartments. It'd be nice to, like I left the house today and I noticed something that needed repaired. It'd be nice just to call management and say, hey, will you get this fixed? So a lot of people are like that ease of ownership or to live there and just have a problem. All right, we're going to have more for you in just a moment on the apartment market. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show, where we always have fun, right? We're invited to check out Commercial Real Estate Show TV. Yes, you can visit YouTube and search for the channel Commercial Real Estate Show. You'll see a lot of great interviews and videos about the commercial real estate related topics there. Well, today we're talking about apartments. My guests are Mike Altman with Cortland Partners and Ernie Eden with the National Apartment Group with Bull Realty. And guys, we've talked a little bit about the market. We've heard Jay Parsons with RealPage talk about a little bit of overbuilding, maybe possibly concerned in some urban markets of some cities. And this great rent growth slowing down a little bit, but maybe to a more normal pace. Is it still a good time to buy apartments, Ernie? I mean, we've got really low interest rates. You can still get good financing. Is it still a good time to go out there and buy apartments?
This is a great time to buy apartments. Right now, we're seeing people all over the country decide that even if they haven't been in the apartment market before, they want to get into apartments. And the reasons are several. One of them is that rates are historically low. The other one is that they can buy for cash if there's a property they need to reposition and then still have time to refinance while rates are low.
Mm-hmm. Okay. And what do you see, Mike? You think it's still a good time?
Well, the Fed told me that rates were going to remain low forever. So
they promised you.
They promised me that, and so I'm betting the farm on that fact. Rates just are going to be this way, and that's just a static condition, Michael. It's not going to change. Yeah. No, I honestly watch the interest rate market more than I watch football these days. It's more volatile, it seems, but the reality is I think the interest rate market is going to change over time, and it's going to change the type of opportunities that are the best investment over time. Right now, you can purchase something at a very low cap rate, you put a very low interest rate on it, and there's still a margin there for your reasonable risk-adjusted return. Soon, it'll make much more investment sense to be focused on value-add properties or development where you can make a yield greater than the interest rate market and therefore still get that risk-adjusted return.
All right, let's talk about that a little bit. What are you guys at Cortland Partners doing as far as buying and selling right now? Are you actively buying?
We have been a very active buyer in 2013, purchasing 22 properties year to date. I think we could, perhaps in 2013 close as much as 10,000 units. Nice. We started the year with like 9,600 units, so we're very actively growing, almost doubling in size this year. Our target investment is a Class B property with a value add component. Value add to me is taking an existing piece of real estate and finding how it can be optimized. Sometimes that's amenities, sometimes that's just better management and marketing, but often it's obsolete, replacing obsolete kitchens or obsolete finishes. Maybe it's architectural enhancements, doing whatever you can do to that existing real estate to position it to the highest potential in that submarket. And that activity post-acquisition is creating more yield, more NOI, and more investment return overall. Those properties in general for us are in the Sun Belt. We think that's where the population's growing. We see that as the growing markets. Mm-hmm. We really focus on Class B properties, both urban and suburban. We're not opposed really to either one of those. I really say it's 1994 or newer properties. That's when the America with Disabilities Act came in, which really kind of increased building codes. You got much more 9-foot ceilings. You had better, tighter buildings being built overall. So we're not going back to the 70s product. We're really kind of looking at that mid-90s and newer. And our best investment would really be 250 units or greater. Okay. We want a very efficient operating platform where we can provide a high level of service to our residents, and to do so, we need a sufficient number of units to, bear that fixed cost.
Right. Okay. Well, that's a good point. And what about development? Are you getting rents high enough in some of these markets to do new development?
The answer is yes. You're definitely getting strong rents. I mean, rents are stronger now than they were before the downturn. I think the question is from an investor standpoint, is are you getting paid an appropriate yield to develop properties? Real estate developments, it has inherently more risk than acquisitions. And so you need to get paid a bigger reward for that risk. In the urban core properties, the margins on development are very tight. And to us, it's not providing you a sufficient return for the added risk. So yes, we're developing property, but in secondary markets. We're in Lake Charles, Louisiana. We're in Savannah, Georgia. We're in Fort Worth, Texas. We're in Birmingham, Alabama. Those are markets where you can go through the development process and create a yield that is 250 basis points greater than a cap rate in that market, which is a sufficient risk-adjusted return. So that's the opportunistic play for us on development, is in secondary markets.
Okay, that's great. So how many properties do you have under development right now?
We have 2 properties that are in current construction. We have 3 properties that are in the development pipeline, going through permitting, and a wild ride in the construction pricing market.
And we want to talk a little bit about that. And we're short on the break, Ernie, but what type of properties are you seeing most demand in?
Everybody wants to be properties, it seems, particularly those with a value-added component. Different people have different ideas of what that is. Some people want something that's a little bit older where they can bring it up, but there's absolutely a lot of demand for the B properties.
And that's all size properties?
All sizes. It really, there are people who are just starting out and who want something small, 30 units, 40 units, 50 units, and there are other people who are institutional who want 200 units or better.
How about C? You getting any demand for C product?
There's still plenty of people who want to take a C property and do what they can to bring it up and make it better and improve the rents and the occupancies. Absolutely.
Yeah. Well, it's moving down to that area where you can raise rents on those properties. So there's a lot of opportunity in the apartment market, especially with better management, as you say. Well, stay tuned for more on the apartment market. I'm Michael Bull. This is the Commercial Real Estate Show. Right back. The Commercial Real Estate Show is brought to you in part by France Media. France Media provides exposure to the world of commercial real estate. Visit francemediainc.com or call 404-832-8262. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Hey, thanks for your positive comments on Facebook, LinkedIn, and Twitter. We do certainly appreciate hearing from you. Well, today we're talking about apartments, and we have Ernie Eden here with Bull Realty and Mike Altman with Cortland Partners. And Ernie, what are some of the benefits of investing in the apartment industry and the apartment market versus some of the other sectors?
First of all, there's a really quick response time. If the rents are changing, you can raise your rents faster in apartments than any other kind of property type. You have the opportunity to test things. Let's say you want to make certain improvements. You can test it in 1 or 2 apartments and see how it goes. And if you get good response, you can do it everywhere. You've got more buyers because you've got everything from a small property to a very large property. And you've got lots and lots of people who have had experience in a house and therefore think they want to be an apartment owner. So that's an opportunity. Everybody needs a place to live, so there are more tenants. Everybody thinks they can tweak the management and do much better than the last guy, and that's always an opportunity. And then there are some niche markets. Student housing is one that's doing real well, and senior housing, 55 plus. There are more and more communities that are being built with those folks in mind, And as this baby boom generation seeps through, it's going to get larger and larger and larger. 10,000 people every day turn 65 in this country.
Yeah, that's a lot of positive reasons to buy apartments. I mean, would that mean positive reasons? You could do a ShamWow commercial, just yell those out, right?
Right.
I think there is a lot of opportunity in the apartment market also, and you mentioned, Mike, earlier, better management, and you also talked about new construction. So what do you see for construction prices out there and cost today?
It's rising, and I think I've seen most recently 1% a month. So your overall project cost is going up 1% a month. It's pretty quick, and the reality is that in 2009 and 2010, right at the bottom of that trough we went through, we scored some amazing construction deals. We had a lot stronger pricing, or the contractors were very aggressive with their pricing, and subcontractors were hungry. And I think now they're tired of being hungry, living hand to mouth, and there's a lot of their competition is out of business, and so they're just demanding a higher price. I think you've seen some specialty trades, electricity, plumbing, those trades. There's other uses for those skill sets. The oil industry is growing. There's other things that people are doing with those trades and leaving less qualified labor for construction. Frankly, I think that construction prices are going up and will continue to rise, especially as other real estate types. Hotel, for instance, is probably the next group to really start to grow, and specifically grow in new hotels is going to take a lot of commodity pricing is going to follow that labor price increase. That
makes sense. So what's new in the apartment communities today?
Well, I think new construction projects are building smaller units. There's no dining rooms anymore, right? There's really nice kitchens and open floor plans, but Gen Y is not having dinner parties. They're out. They're in the bars and the restaurants. They're not necessarily having all of that sort of meal preparation in the house, and so the kitchens are getting more compact. We've seen smaller appliances even.
I wonder why I'm not getting invites from my Gen Y friends.
Michael, do you have any Gen Y friends?
Absolutely, I do. Well, Ernie, do you have a good closing tip for our listeners today?
If you're a buyer, get yourself organized before you go and make the offer. Make sure that you've got money that you say you have, that you can prove that you have it. Have a bio, show them who you are so that they can understand what their chances of closing with you are ahead of time instead of after the inspection is done. Have several choices for alternative ways of financing. If your first choice doesn't come through, have a backup plan, because this is such a great opportunity that you can miss the boat. It's done.
Good point. Ernie, Mike, thanks for joining us today, guys.
Thanks for having me. It's great.
Thank you, Mike.
Well, be sure to join us next week. We'll talk with Mitch Rochelle on the PwC ULI Emerging Trends. I'm Michael Bull. This is the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. And make sure you listen to the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by your friends at Bull Realty, France Medio, Atlanta Office Liquidators, and Wiseman, Nowak, Curry, and Wilco. For more information about these companies or to access additional show podcasts, videos, or blogs, visit commercialrealestateshow.com.